Ladies and gentlemen, good day and welcome to IFGL Refractories Limited Q2FY25 earnings conference call hosted by Monarch Networth Capital. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sahil Sanghvi from Monarch Networth Capital. Thank you, and over to you, sir.
Thank you, Nia. Good evening, everyone. On behalf of Monarch Networth Capital, I welcome you all to the Q2FY25 earnings conference call of IFGL Refractories Limited. We are pleased to have with us management being represented by Mr. Arasu Shanmugam, Director and CEO India, Mr. James McIntosh, the Managing Director, and Mr. Amit Agarwal, the Chief Financial Officer. We will have the opening remarks from the management, followed by a question and answer session. Thank you, and over to the management now.
Management?
Good evening, ladies and gentlemen. Thank you for joining us on the IFGL Refractories Limited Q2FY25 earnings conference call. I hope you and your family and friends are in good health and had a great Diwali. Along with me in the call, we have a Director and CEO India, Mr. Arasu Shanmugam, and also we have Mr. Amit Agarwal, our CFO, and SGA, our Investor Relations Advisors. We've uploaded the results of the presentation on the stock exchanges, and I hope everyone's had a chance to go through the same. According to the World Steel Association, global steel demand is expected to decline by 0.9% in 2024. However, after 3 consecutive years of decline, a broad-based recovery, excluding China, is anticipated in 2025. Global steel demand is forecast to rebound by 1.2% in 2005, and it's anticipated that there will be moderate demand recovery in the second half of this financial year. The year 2024 has been particularly challenging for global steel demand as the manufacturing sector continues to face significant headwinds. These include declining household purchases, aggressive monetary tightening, and escalating geopolitical uncertainties. Additionally, ongoing weaknesses in the housing constructor sector, driven by tight financing conditions and high costs, has further dampened the steel demand. India has, however, solidified its position as the strongest driver of steel demand growth since 2021, a momentum that is set to continue. According to the World Steel Association, India's steel demand is projected to grow by 8% over 2024 and 25. This growth is fueled by strong performance across all steel-consuming sectors, particularly driven by sustained infrastructure investments. India's robust infrastructure development underscores its pivotal role in the global steel market, positioning the country as a key growth engine for the foreseeable future. Over the past 2+ years, we've witnessed consistent growth in our Indian businesses, and this momentum has continued in the current quarter. For the half year, we achieved a 15% year-on-year growth. I'm pleased to share that our standalone domestic market now stands at 69%, up from 61% of its total revenue in the same period last year. We've grown by 30% year after year for the last 3 years on the domestic side. On the development front, I'm pleased to announce that we have entered into a joint venture agreement with Marvel's International Group of Seychelles and Marvel Refractories of the People's Republic of China. This joint venture will establish a limited liability company in India to set up a greenfield facility with a capital outlay of approximately 300 crores. The facility will focus on manufacturing products for the cement, glass, non-ferrous and gasification industries, further strengthening IFGL's portfolio and enhancing our capabilities in these key sectors. Arasu will cover this in more detail in his conversation. I am pleased to share that we've completed the payment of the Odisha land to the government entity and is expected to receive possession shortly. Additionally, our US subsidiary EI Ceramics has acquired a building in Ohio for development of a state-of-the-art ISO plant, which will give us an uplift in capacity of 40% when complete. These developments continue our focus in strengthening our global footprint and operational capabilities. Now I'm pleased to hand over to Arasu.
Thank you, Jim. Good evening, everyone. This quarter proved to be particularly challenging for us as our overseas businesses face economic pressure, slowdown, and geopolitical uncertainties. However, we anticipate some moderation in these challenges during the second half of the year, and the demand with a moderate revival in demand from EU and the US. Our financial performance was also impacted by another factor, the preventive restructuring undertaken by major customer Liberty Ostrava, who had significantly contributed to the last year's revenue, and some competition pressures also. Despite these headwinds, we remain focused on navigating these difficulties and are optimistic about improving conditions in the coming quarters. As you all are aware, we have been expanding into the non-ferrous sector to diversify our business, add value for our customers, and tap into new markets. We are proud to announce the inauguration of our state-of-the-art casting flux granules production unit in Visakhapatnam, which boasts an impressive annual capacity of 18,000 metric tons. Additionally, we have launched a new magnesia carbon production line as part of our S3 expansion. As we continue to advance our strategy in the non-ferrous segment, I am pleased to announce a significant new step in our journey. As Jim mentioned earlier, we are establishing a joint venture in India with Marvell's International Group Company of Seychelles and the Marvell's Refractory and Company of China, aimed at enhancing our brick production capabilities in the country. Let me share some key highlights of this exciting development. The JV will set up a greenfield facility in India to manufacture high-quality products, including basic fired magnesite spinel brick, basic fired bricks, and fired magnesia chrome bricks. The estimated project is rupees 300 crore, with plans to begin trial and commercial production by March 2026. We are committed to maintaining a balanced debt-to-equity ratio for the JV, which will not exceed 1:1. IFGL Refractories will hold a 51% stake in the JV, while Marvell's International Group Company will hold 49%. This partnership is a significant milestone in IFGL journey as it marks our strategic expansion into non-ferrous sector while building on our legacy of over 4 decades of leadership in the ferrous segment. By establishing a local plant in India, we are set to bring more Make in India opportunities to the refractories industry, particularly for the cement sector, which has historically relied on imports. Let me give you some highlights on operations side. I am pleased to share that our domestic businesses demonstrated strong growth with a 15% increase in Q2FY25, despite facing challenges such as shutdown at some major client facilities. This is a significant achievement for us, reflecting the hard work and dedication we have put into expanding our presence and penetration in the domestic market. The economic environment marked by inflationary pressure, supply chain disruptions, and fluctuating demand has had a direct impact on their ability to achieve the growth levels we anticipated. Despite these challenges, we remain committed to supporting our subsidiaries through these tough times. We are actively reassessing our strategies in this market to better align with evolving conditions and ensure we remain competitive moving forward. With this, now I hand over to Mr. Amit Agarwal, Chief Financial Officer, for financial performance.
Thank you, sir. Let me just give you a brief on our financials. Starting with the standalone financial highlights. Total income saw a decline by 2% year-on-year to rupees 257 crore in Q2 FY25. For H1 FY25, total income stood at rupees 506 crore, which saw an increase of 2% year-on-year basis. EBITDA stood at 33 crore for the Q2 FY25, and for half year ended it was 78. EBITDA margin stood at 13% in Q2 FY25, and for H1 FY25 it was 15%. PAT was at 13.7 crore in Q2 FY25, and for H1 FY25 it was at 35.7 crores. Let me now move forward to consolidated financial highlights. Our consolidated financial highlight also include our international subsidiaries. Total income saw a decline by 10% year-on-year to 415 crore in Q2 FY25. For H1 FY25, total income stood at rupees 837 crores, which was down by 6% year-on-year. EBITDA stood at rupees 37 crore for the Q2 FY25, and for half year it was at 90 crores. EBITDA margin stood at 9% in Q2 FY25, and for H1 FY25 it was 11%. PAT was at rupees 12 crore in Q2 FY25, and for H1 FY25 it was at 37 crore. With respect to the liquidity position, we remain net debt free with a strong balance sheet. Cash and cash equivalents stood at rupees 183 crore in consolidated basis as on September 24. Our annualized ROC stood at 9.3% and our annualized ROE stood at 6.3%. With this, I shall now leave the floor open for question and answer. Thank you.
Thank you so much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to all the participants, you may press star and 1 to ask a question. The first question is from the line of Harsh Shah from Dalal & Broacha. Please go ahead.
Yeah, thanks for the opportunity. So firstly, if you could explain the rationale behind, kind of going ahead with the DBM bricks over continuous casting refractories, and also is the capex amount still at 150 crores or has there been any change in that? And related question, if you could give some details or some color on the market size of the DBM bricks and who are the competitors in India? Yeah, that was my first question.
Yeah, I mean, Harsh, one is that, why not ISO and, DBM brick? Let me tell you, on ISO part first, we have a combined capacity of 80,000 pieces a year, roughly, okay? And we do see that this will be sufficient till next coming 5 years when we are going to utilize for both domestic and export put together. The most modern plant what we have created in Kandla has 50,000, and we have also found out ways and means of using this most modern plant to deliver better value to domestic customers from Kandla in combination with the supplies from Rourkela for a particular sort of products, which will also add value to customer as well as our capacity utilization. And going for one more ISO now will not make big sense as far as capacity utilization is concerned. Okay, and so that's the reason why we have changed the thought process. And on the bricks, what we are talking about is also like conventionally we were limited to steel sector of entire market, but now we are broadening it to iron and steel as well as non-steel market. So these bricks will be used predominantly in non-steel sectors as well as some of the steel plant where the bricks part we were not there. Okay. And as far as competition is concerned, yes, here the competition will be the existing competition only, like RHI and PRL Cross-Factory, but otherwise there is no much competition.
Okay, and on the capex, it would be somewhere around 150 odd crores or?
No, right now we are envisaging the same. There is no change in investment level and all. Within that only it will come. And as we go down maybe a year later, so if there are any slight modifications to that, we will keep you all informed.
Got it. And if I have to say compare the margin profile of DBM bricks vis-a-vis the continuous casting, how would you kind of assess that? Is it similar, better, or a bit downwards?
And I can say that our overall, our overall guidance of 15% EBITDA for the whole, this is also will be, after this project implementation also will be in the same level and there won't be any up or down.
So is it safe to assume then it would be in double digit?
Definitely in double digit.
Okay, so when you say 15%, that would be on standalone basis, right?
Yes.
Okay, great. Secondly, on the JV that you have entered recently, if you could give some sort of, specific as to what is the market size of those bricks that we are going to, kind of produce, and if you can give some color on the asset turn that can be expected, it would be, great, helpful.
See, once when the detailed DPR is under preparation, so I think with the coming next calls, we will have even more detail. But otherwise, on asset side and other thing, it's the regular, from mixing to pressing to drying to firing and sorting. So these are going to be the process. What differentiates is the technology which gives us edge for becoming one of the key players in the industrial sectors with which plant.
Okay, but any color on the market size, at least?
Color on the market size, size is, it's like particularly the industrial market segment where I would say that it's kind of, if you have to put a number, so it's around, let's say, we are going to, particularly on cement alone, this particular sector will consume around 500 crore worth of, this similar product in a year. And there will be another 150 crore in other non-ferrous and glass. So overall, it is around 650 crore market where the number of players are limited to 2 or 3 max.
Okay, so basically it is more of an import substitution kind of opportunity.
You are right.
Okay. And also on the DBM bricks, if you could highlight the market size for that also.
I think that we will come out with, we'll let you know in the next, call, because we are still working, and we'll come back.
Okay. Thirdly, on the contribution, if you could highlight what was it from the new casting flux and the magnesia carbon bricks for this quarter?
So this quarter is primarily on, entry, stabilization, all those. So actual supplies volume will take place in Q4.
In Q4, okay.
Yeah.
And what, if you could quantify the impact of the freight cost in the other expenses?
See, I could only tell that, it has increased from last year H1 substantially.
No, so that we also know. Why I asked this question is because the EBITDA margin for the standalone operations, what we had guided for, say a 15%, is not kind of achieved even in this quarter. So I just wanted to know what is the incremental impact of the freight cost.
I want to go into the macro details. At guidance level, we maintain the same guidance.
Okay. Yeah, I'll get back in the queue. Yeah.
Yeah.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Aditi Swan from ADM. Please go ahead.
Yeah, hi. Thank you so much for the opportunity, sir. So just wanted to take an update on the acquisition. That we were looking at few acquisitions. So any update on that front, and what size it would be if we plan to go ahead, and are we on that front, it will be in India or overseas?
We do not have any. Yeah, again, please go ahead.
No, I was just going to say yes. We do have an acquisition that is currently under review, and it is in India. But with regard to details, I wouldn't like to share any other details at the moment.
Sure. No issues, sir. Just last question, that on the domestic business has relatively seen good growth. So what will be what will be the strategies around this business going forward?
Really, the strategies Arasu can cover, but in general terms, our focus on Indian growth has been based around technology development and new product development, and it's been very successful. Arasu, you might want to put more detail on that.
Yes. So in domestic business, particularly on bricks, as what the question was asked by the previous caller also, this actually we are getting a very good early market indications, which will get consolidated when we land into Q4, and the next year it will have a substantial portion of our budget also. So brick business is one. Another one is the ramping up of casting flux. So both we have, particularly on the casting flux, we have put a good team which was not there earlier. So both casting flux and this magnesia carbon bricks, they are going to make a big difference on our domestic business growth, in addition to our venture into industrial, which is totally a new one. So all put together is going to make our domestic strategy even more stronger in coming quarters.
Got it, sir. Thank you so much for the detailed answer, and all the best for the upcoming quarter.
Thank you so much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Rohan Mehta from Nexa Capital Partners. Please go ahead.
Yeah. Hi. Thanks for the opportunity. Am I audible?
Yeah, you are very much.
Yes. So, sir, firstly, just wanted to get your thoughts on how you are seeing the export business evolve, in the coming times, and what strategies or what plans are we, implementing, or initiatives are we, undertaking to drive growth in the export business?
Yeah, we have on the certainly from the point of view of overseas business, this would include also the subsidiary companies. I mean, on the export side, and Ashley could maybe cover that from the point of view of the standalone, but on the subsidiary side, we have a very difficult situation. I mean, if you look at many of our steel markets overseas, the percentages are quite substantially down. The North American market, for example, is about 3.9% down. So far this year from last year, we have the European business with no growth, and then so there's definitely headwinds there. But our focus has been to really try to work still to improve our plants to be ready for the future growth which we expect. As we said, I mean, the World Steel Association sees 2025 as coming back into growth for many of these areas, and for us, we think that obviously there's been a major election in the US, which is now over, and hopefully this will enable the US to take a more positive stance on steel growth, and hopefully we will see some changes in the geopolitical situation worldwide, which will help us in other areas. So subsidiary-wise, we still feel that we have another quarter at least of let's say depressed figures, but then we hope to see some changes from there.
Sure, sir. Secondly, I just wanted, can you just throw some color on the new JV with the Marvels International Group? How will this, benefit our business in terms of, the synergies or anything? And as it is a greenfield project, where are we planning to set up the facility?
Yeah. See, I think on JV part, we have already answered in the previous question, but the one specific question what you are asking is about the location of the plant. One, it is going to be a greenfield project. Two,
right,
it will be in the northwest region of our country, where most of the modern cement plants are coming up with very high throughput, like in excess of 8,000 to 9,000 tons per day kind of cement, which will require this specific breaks, which are primarily made through import, which we will substitute, and this will be in northwest.
Sure, sir. Thank you. Thank you so much for answering my question.
Thank you so much.
Best of luck. Thanks.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Sahil Sanghvi from Monarch Network Capital. Please go ahead.
Good evening, and thank you for the opportunity. My first question was, what can be the optimum revenues from the magnesia bricks and mold flux products?
No, yeah, I mean, it's like both when we are reaching, let's say 90%, 95%, both bricks and casting flux, it should be anywhere between 300 to 350 crores. Both put together.
Both put together. Okay.
Yeah.
Okay. Secondly, would you be able to quantify the loss in volumes or the loss in, say, absolute revenue terms, which happened due to the Liberty shutdown? I mean, what could have been the incremental revenues we could have done if the shutdown was not present?
I think if you go to our December 23 results, we have mentioned around 38-39 crore of provision we have taken. So something about 30-35 crore of revenue we have lost this year. We have not done any business with Liberty.
Oh, okay.
The ballpark figure.
Oh, it's the same one. Okay. And thirdly, are we seeing any RM cost pressure, especially with respect to alumina cost? With some of the peers alluded to that. So
there is a rise in alumina price, no doubt about it.
Okay. And in the second half, can you, if not name, tell us which, a couple of plants where these are new plants which are getting commissioned. Are we present over there, and will we see a recovery in the volumes due to these new capacity?
Where? Sorry. Where can you repeat the question? They are not clear, please.
So I was saying that some of these new steel capacities in India have got delayed. So are we present over there, and will that lead to recovery in volumes in the second half?
Which capacities can you just throw light? Because based on you mean to say that our projection for expected increase in capacity is still not happening, or
so like Tata Steel has a new plant, the expansion coming up. So would that help us? That's what I'm trying to understand.
As far as Tata Steel business is concerned, yes, we have great potential, and then we have even reorganized our structure in such a manner that we also leverage Tata Steel growth for our business. So definitely our ways and our approach towards Tata Steel has also strengthened, and this is going to help us.
Sure. Thank you so much, and all the best.
Thanks.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Aryan Sharma from B&K Securities. Please go ahead.
Hi, sir. Good evening. So single question, just to add on to the previous participant. Could you share the impact of various raw material costs like magnesite, alumina, etc.? Like we are seeing these costs move upward unanticipatedly, and these for the pass on is a lag. Like it is affecting our realizations. Also, there's like a double whammy from lower realizations and higher costs impacting our margins. So could you share the impact during the quarter and outlook for the rest of the year? That would be helpful. Thank you, sir.
See, the numbers, are overall, you have seen the result. That's a result of exactly the two impacts what you said from both sides. On the realization side, we all know India have become last quarter a net importer of steel, and that will put a lot of stress on some of the medium-sized steel people. Even throttle down their production because they couldn't make, as well as the large player also reduce that production. So they put a lot of pressure on factory vendors for reducing price. And overall, I would say that there is a kind of 7 to 8, 9% net realization reduction from steel customer, which is predominant customers for most of the refractory vendors. That has reduced. That has that had a big impact on market. On the other side, both alumina as magnesia price increased also, because there again the large vendors like very big people, international vendors, they have also increased their price. Both sides, because they have got a very clear index with which they move their prices. LME is jumping, like what Mr. Agarwal has mentioned, like the alumina index, which is switched, which increased from somewhere between 350 to 60. Now it is already crossed 600 and going towards 650, more than double. So they have a formula of markup price over this. So both sides we were compressed. And conventionally in refractory, passing on takes place after 4 to 5 months or even 2 quarters constant effort to customers. And that has not happened. We are only hoping and we are fighting with various customers to do that. We hope that some relief may come in the middle of Q4 or next year only when the passing. So the lag period of passing on to customer is almost 5 to 6 months, and that's unfortunate reality in refractory. Okay, so both have definitely impacted our margin. You are right.
Okay, sir. So are we still maintaining the 15% guidance despite this change or lower realization in higher margins? So are we still maintaining that 15%?
Yeah. Overall, we are, because it's a total like some kind of a new area which we are entering. So we need to do something to maintain that. So that's what we are expecting on standalone basis.
Okay, sir. Thank you. Got it. That's all.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Mayank Bhandari from Asian Market Securities. Please go ahead.
Thanks for the opportunity, sir. My first question is on the competitive scenario. I just want to understand how is the competitive scenario in the flow control segment, usually in the brick segment, because we have seen commentary from a competitor that bricks is a highly competitive. Chinese competition has increased significantly in that segment. So how is this in the flow control segment? And secondly, is there any Chinese player who has become dominant in the last 1 year in the Indian market and grabbed share in larger clients like Tata Steel or JSW?
Yeah, see, there are some players, particularly China, 1 or 2, but the more and more now customers are looking into supplier, partner, refractory partner who can provide service over a little longer value chain throughout, so that it becomes seamless in producing, managing the refractory. So in that way, there are pressure on price, but as I was mentioning, at end of the year, maintaining our margin and other things, yes, we have our ways and means of managing this challenge, but there are challenges.
Okay. And sir, for the first half of the year, can you give subsidiary-wise financials, monocon?
I think segment of consolidated, you'll get an idea. Otherwise, we are not disclosing this company-wide number separately.
Okay. And so how is the business in the Sheffield or refractories, at least if you can give some idea?
Sheffield, I think, is doing the same way they were doing in last couple of quarters. The sales they are maintaining as in Q1, and obviously there is a dip in profit as compared with last quarter because of the geopolitical and economic scenario.
Okay. And we have plans of bringing some of the products from the overseas market to the Indian market before. I'm just wondering how is that thing going on?
Yeah, so we definitely have plans because Sheffield has technology which are cutting edge in nature for Indian market, and please wait for 3 months so you will come to know the kind of action what we are taking in leveraging that technology for Indian market. They have already taken steps. There are preparations going on, and particularly in monolithics and technology we are bringing. I think let the next call after the Q3 we will give you even more details. But we are doing that, and we are leveraging, and there are time-bound action plans already in place.
And lastly, sir, we had mentioned about some acquisition we are going to do in overseas as well as in the Indian market.
We were mentioning about, yes, we are open for growth both organically and inorganically. Organic part we have already, it's very clear. We have already announced, declared that JV plant is coming up. Odisha we are also building. So all those. And the same manner, inorganic, the sensitivities related to inorganic. Till the time we reach to a stage, sharing any details will not be appropriate. But otherwise, we are open for both.
Okay, sir. Thank you.
You are welcome.
Thank you. The next question is from the line of Harsha from Dalal and Brocha. Please go ahead.
Thanks for the follow-up. One question regarding the new greenfield at the Odisha location. So you did mention in the opening commentary that we have not yet received the land. So do you expect the commercial production to start in FY27, or there could be some delays on that front also?
It will be definitely in FY27, maybe in the latter part.
Okay. Secondly, if you could give some color as to what percentage of our standalone revenue, is getting contributed from TRM?
No, what do you mean by TRM?
Total refractory management, meaning all these services also.
Oh, so that's, as I was mentioning, like the entire market, particularly in steel sector, is converting into, this TRM mode slowly, which was only limited to ladle, tundish, slide gate, all those areas. But they are extending that on both sides of the value chain from that point. So that means even it is going up to iron from starting from blast furnace, and this side even going up to the re-rolling and even walking beam furnaces. So this is going to increase. So more and more, if you go in future, all refractory players, including IFGL, who are in steel, out of steel business, at least in excess of 65 to 70% will come from DRM model only. That's what the future, and it is evolving.
So currently, what exactly it is, if it is in future 60-65?
Exact numbers, but like in the total maybe I can put a ballpark here of 35 to 40%.
Okay, got it. And also, on say, if we have an outlook of 3 to 5 years, where do you see the non-ferrous contribution to the overall revenue in terms of percentage? Ballpark would be fine.
As I said, let's say we expect our maturity in this market in coming 3 to 5 year time. So in that, if you say it's something like we have ballpark number, if I have to give 1 minute. So this will have a share in top line close to 15 to 17% as of now, but it may change and increase.
Okay. And also, on the, say if we have to look the H2 of this year within the standalone operations of the products which are made and sold in India. So can we expect, considering that certain capacities are coming up, that our H2 growth vis-a-vis H1 within the standalone operations could be, say, somewhere around 15%, or if you could give some color on that.
We are talking about the H1 of FY25 versus H2 of FY25?
Yeah, yeah.
Yeah, because we definitely have a plan of gaining some of the losses of in H1 in H2. But exact numbers, we can't. But definitely we have a plan of making up some of the misses in the H1 to be made in the H2. The H2 will be definitely larger than H1. H2 will be better than H1.
Yeah, so meaning what I was trying to get was, is there a double-digit growth that is possible?
I can't say exactly because it all depends on we'll come to have some idea about end of Q3 because as we mentioned in the beginning, our brick and casting flux both are expected to grow in the Q4. But definitely a decent growth between H1 and H2 of this year, definitely.
Okay. And anything on the recovery from the client for which we had made a provision? Meaning, I think 2 calls back, you all had mentioned that the recovery may start in a year or so. So any update on that in terms of recovery from that client for which you had made a provision?
As of no amount of recovery to be mentioned because it has no impact on our books also as we provided 100%. If we get something, we'll update.
Okay. And lastly, on the cost that we had incurred from Q4 of FY24 with respect to appointing Deloitte for the whatever HR transformative initiatives that you took, is that cost still reflecting in our other expenses?
Yeah.
So how long is the contract for?
This year full it will be there.
No, so next year onwards?
It will not be there.
Okay, so it was a 1 year. Okay.
Yeah.
Got it. Yeah, that's it from my side. Thanks.
Thank you. Ladies and gentlemen, we'll take this as the last question. I now hand the conference over to Mr. Sahil Sanghvi for closing comments.
Yeah, just want to thank the management to patiently and elaborately answering all questions. And also want to thank the participants on behalf of Monarch Network Capital to participate in the call. The management, do you want to give any closing remarks, please?
Yeah, I hope we have been able to answer most of your queries, and we look forward to your participation in the next call. For any queries, you may contact SGA, our Investor Relations Advisor. Thank you very much.
Thank you. On behalf of Monarch Network Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.